The theme of our conversation today will be around the growing trend of InsurTech and the partnerships that are being formed between incumbents and the InsurTech startups and the ecosystem of insurance. And I'm sure all of you are familiar with the trend and how many new startups are emerging with this genre, with this line of technology, and also how many partnerships are being built. So we've got this amazing panel with a diversity of technology and industries background here. So let's start with an introduction. Sam, do you want to?
Yeah, hi, morning everybody. My name's Sam Evans. I'm founding partner at EOS Venture Partners. EOS is a strategic InsurTech VC. So we focus exclusively on insurance and InsurTech, investing globally. Series A is our sweet spot. We've made 8 investments so far, ranging from everything from commercial marine insurance, smart home proposition, and digital claims.
Hey, Dawid, Glawdzin, Director of Operations for Slice Labs UK. We are an InsurTech startup providing on-demand insurance for the on-demand economy. We do this through our own proprietary platform, Insurance Cloud Services.
Hi, good morning. I'm Saadhvi Khullar. I'm the European Portfolio Manager for Munich Re Digital Partners. Munich Re Digital Partners works with InsurTech startups to launch and bring them to market. We currently have over 20 successful partnerships globally.
Sam White, CEO and founder of Freedom Group. It's an insurance group of businesses mainly focused around the motor space. I started my first business when I was 24, and I look at the insurance industry from the perspective of the claims process.
So we've got a wonderful mix here, starting from the inception of a technology startup all the way to the startups that are at a fairly mature stage, all the way to big reinsurers of the insurance ecosystem. So let me start with Saadhvi by asking how she sees the trend changing or impacting Munich Re's vision of its role in this ecosystem, the right models of partnership, and so on.
So I think the very fact that we have a unit called Digital Partners is testimony to the fact that we see this as a significant change in the way that the consumer, much like was said in the introductory note, is ingesting insurance. I think we are looking to bridge that gap between the mothership of what insurance is perceived to be or was, and also what the InsurTechs are now trying to do to match this change in consumer behavior. So yes, Munich Re definitely is looking to partner with the innovators, the people who are doing the lateral thinking, the digital verticals, and through our business model, through the cementing of such a strong and strategically purposeful business unit, we are hoping to encourage and also bolster that significant presence of InsurTechs within the insurance space.
And when you do the investments, is it for financial return or for business added value to Munich Re, or like how do you justify a case as a good case for investment by digital partners?
So we work with our units, HSB, who look after our investment side of things, and often it can be a strategic partnership that we look to see will be beneficial to us, or it's just something that makes sort of financial sense in a way. I think currently we have a mixture of both. We have Dawid on the panel from Slice, which is one of our strategic partnerships as well. And I think it's independent. So they make a decision based on purely what is a good investment for the unit of digital partners.
So Sam White and Dawid, you are from the startup side of the insurance ecosystem. I'm going to quote a friend who was saying that in finance, including insurance, he thinks that the winners are the incumbents who innovate. So as the startups who are entering in this world, how do you guys think about that? Maybe we start with Dawid and we go to Sam after that.
Sure. I think the mindset of the whole ecosystem is changing. I've most certainly seen this through my journey at Slice. I guess startups initially were perceived as disruptors. Now we're talking more about the partnership model. More companies recognize what we can bring to the table. And for example, at Slice, we started 3 years ago with a PowerPoint presentation created around the coffee table. Now more large companies and recognizable brands are buying into our vision. And we work with partner, obviously, with Munich Re. We partner with Progressive in US, with Excel Kathleen. We're going to work with Legal in General. And we have more exciting partnership now announced very, very shortly. And so the change is there. The more companies buy into the vision and I guess our way of thinking as well and delivering.
Mm-hmm. Sam, do you want to?
Well, I mean, the incumbents should be able to do this better than a new startup. They're already in the market, and they have the presence, the scale. But I think the interesting thing around InsurTech is that insurance generally has built products and then expected people to want to buy them. Because of the changes in consumers, I think that the ability to create products that consumers want to buy is unique. And I think that the mindset in the incumbents needs to change in order to be able to deliver the new propositions. So if they're smart and they partner up with people like us, hopefully, then I think that they will be able to get that kind of scalability of the new business models into the market. But I think culturally and just sort of behaviourally, generally in the insurance sector, there are some barriers in order for them to be able to achieve that transformation.
Like, what are those barriers?
Well, we talked about this on the phone, didn't we? I think that there's a mindset, partly because, you know, what we do is manage risk, and that can lead people to be very risk averse. And if you want to truly embrace partnerships, you have to be open. And the biggest challenge I see for the InsurTech community is trying to engage with the insurers and having the ability to do tests and pilots and to try new things. I think as an industry, the incumbents need to be open to that in order to be able to achieve that kind of collaboration.
I think, just to add a view, our sort of overarching thesis is that, sure, yeah, the new startups will definitely capture value and market share, but actually the bigger transfer of value is going to be between incumbents and those that are actually successful at embracing innovation. And I think Mark made the point in his introductory slides. You know, once the train's left the station, it's going to be very, very difficult for the slower companies to catch up. So I think it's those that can actually really embrace innovation and put it at the core of their business that will see, you know, or drive a significant value shift within the industry.
Yeah. So actually, so you guys are at almost the inception point of a lot of these changes, why you're seeing a lot of early stage startups and so on in the InsurTech space. And one of the things we are seeing is that there are a lot of, I mean, because of the nature of what insurance is, which covers a lot of risks, existing, traditional ones, all the way to emerging ones, there are a lot of tech companies that might not necessarily brand themselves as tech, but could be seen as InsurTech. Like, for example, a company like Darktrace that does AI for cyber is very relevant to insurance, commercial insurance, even consumer. So when you guys think about empowering innovation for InsurTech ecosystem, how do you define what constitutes the InsurTech, and how do you see the difference between a company that is calling themselves insurance tech all the way to companies that has got a tech business but could heavily influence insurance but might not brand themselves that way? Oh, yes. So, sorry. I was just saying that there are two types of companies out there that have an impact on insurance, both of them driven by tech. Some of them call themselves InsurTech and are pretty much a pure insurance business, and some of them are not necessarily calling themselves InsurTech, but could have some part of their revenue from insurance and could have fundamental effect on insurance. Example was Darktrace, that is a company that does AI in insurance. So I was asking Sam how they think about, as an InsurTech VC, how do they define the boundaries of their interests and how to define their strategic scope?
Yeah, sure. And I guess the first comment is to say that there's no hard and fast rules here. And it's interesting, we do quite a lot of work with SBC InsurTech, and when they're filtering for their collaboration programs, actually they're getting a lot of potential entrants coming from outside of the defined InsurTech sector. For us, the way we look at it is it's technology that will have a significant impact on insurance. We want business models that predominantly focus on insurance. There's so much happening out there that we have to set some boundaries around, our ambition. Ultimately, in terms of the underlying technologies that we're looking at, really it's the convergence of, at a broad sense, IoT linking with AI and big data, and then potentially blockchain as the third component. And where those three circles overlap, you can create some very interesting business models that are looking to drive the way insurance is underwritten, priced, the way the customer proposition is really changing away from a pure protection product into something that's more focused on prevention.
And we talked about some of the cultural mindset problems in the industry. We talked about some of the key trends that are driving innovation in the industry. But I think that kind of creates a little bit of a trade-off here for existing entities in the ecosystem, like incumbents and so on, where how should they decide what to build, what to buy, what to invest in-house in, what to partner with external entities on? Do you guys have any view on that? How do you think, for example, a big insurer should prioritize?
I guess from my point of view, and I've seen this works the best, if you are an insurer, the best is to separate yourself from the mothership. We tend to use this term quite a lot, and create an innovation arm, a garage, a lab, send your employees to WeWork, ask them to wear pink flip-flops, and then start experimenting, start building new products outside of the mothership. And then if you like the results, if you like what you see, then maybe start thinking about moving some of your larger books into the new insurance digital world. This approach works the best for me, and you've mentioned Aviva, it's the prime example of
So if the goal is to transform the mothership, you build a speedboat and the speedboat goes fast and disappears, the mothership stays the same, it's fine?
Not necessarily. You need to be in touch with those guys as well. And I guess from Munich Re point of view as well. So again, another prime example, Munich Re digital partners. They're outside of the mothership, but for us, most certainly, it worked the best. That was the best approach.
Yeah, absolutely. And to that point, it's a bit of a weird analogy, but if you think about digital partners, it's sort of sat in the middle of the mothership, Munich Re, and then you have the InsurTechs that we work with, and it's almost our job to speak the language of the InsurTech, understand their requirement, that they want to launch and their product, and translate that back into Munich Re terms so that we get what we want from either side. And it isn't, I understand the speedboat kind of, pelting down and yep, the mothership, staying pretty damn static. But at the same time, what we do is we feed that information back into a palatable manner so that, yes, it might be a slow cultural shift within the mothership, but we are infiltrating and we are, moving the mothership along, albeit not at the pace of the speedboat.
So is there an example that you can share that there is a change in Munich Re that would not have been otherwise possible or very difficult to achieve that has been achieved through that bridging function you guys did, bringing know-how from a startup partnership side to the mothership?
Yeah, absolutely. So within various, mothership reinsurance companies, we have a concept of kind of corporate underwriting sign-offs that take place. Just a very minor example, within normal bounds of Munich Re working, this is a process that takes up to 6 weeks. Our senior management within Digital Partners has worked to accelerate this. Obviously, if these guys want to go live to market within 4 to 6 months, 6 weeks timeline is massively unpalatable. And we've now transformed this process to be vetted within 5 working days, which is, believe me, it seems within current climate, 5 working days, freaking hell, that's still quite a long space of time, but that is definitely transformation within the mothership.
That is really amazing.
Yeah.
And you do that 4 or 5 day thing for your own approval processes internally as well, or is it just dedicated to the external partnerships right now?
So we accelerate all of our internal processes as much as possible, but that one is one where we specifically need the checkbox from the guys at HQ. So yeah, that 4 to 5 days works to get our external partnerships ready for launch.
Yeah. So on the same question, if if there are areas that are like what constitutes a good insurer is some deep expertise on the risk. There is a good operational excellence around underwriting and claim, and if they are big, a good, excellent asset management operation. And knowledge of risk could be also inclusive of risk mitigation kind of know-how and so on. So if these are the core defining principles of an insurance company, and if they are outsourced through partnership, do you see any kind of risk to the necessity of having that insurer if they don't have the in-house expertise in these areas?
So I think our view actually is that the model has to adapt in that way. If you look historically, insurers have operated in a very siloed environment. So they're using their own data and very much their own in-house expertise. The world is changing so quickly that for insurers to really embrace innovation, they need to look at strategic partnerships. Internal data is no longer adequate. There's so much information now coming from multiple different sources, hardly any of which is currently being used for insurance. Those companies that can actually capture, analyze, and draw some insights from that, I think will naturally lead the way. I think the insurance company still retains a key role to play. The regulatory environment, the balance sheet. For us certainly funding a balance sheet is a very different proposition to funding a tech business in terms of growth profile and return profiles. So you still need to look. I think, and certainly in our view, is that most success will be driven by insurers working in partnership with startups rather than a pure disruptor model.
And for me, it has to be a win-win. So I think you've got to identify what problem you're trying to solve. So you talk about data analysis. I've just recently made a very small investment into a tech company. And they have a business that looks around online behaviours and the kind of psychological profiling of people off the back of that. Now, their core business model wasn't designed for insurance. I will be collaborating with them to use it from an insurance perspective. In that set of circumstances, both partners win. So they get additional investment and they get a different market trajectory. I get a different slant on my book of business than I would have had normally. I think where it becomes a conflict is when the partners aren't going into this scenario on a win-win basis. So if the incumbent is just thinking, I will use the tech startup to get what I need out of it and then I'm going to bring it in-house, then it will start to create resentments within the industry that are going to be very difficult to overcome. So I think the intent at the start of a relationship is really key in these scenarios.
And it's interesting, actually, there's a question here asking, do we feel incumbents are taking advantage of startups by asking them to partner? And
they do.
And they do, and we've seen some pretty poor behaviours actually in that sense. But I think the reverse. I mean, as long as it's created in the right way with the right expectations going in, both parties can add significant capability, expertise, drive to the partnership. So certainly where we're looking to create success is really getting alignment in core values between the incumbent and the startup.
Mm-hmm. Yeah, that makes sense. One of the kind of still relevant to the same umbrella question around shift in the industry. One of the key drivers, if you ask me, probably the most important driver, but people have different views on this, is definitely the talent. Like we see talent mobility between many industries, particularly in the current environment, from tech to many industries. Like we see a lot of VPs and SVPs from giant tech going to JP Morgan, or a lot of financial institutions, investment banks, and so on. We haven't seen much of it in insurance. How do you think about that? Do you think it's a good thing, it's a necessary thing? And do you think it hasn't happened, but it's about to come? Or like, how do you guys think about that? Do you think we should be worried about that happening or not happening?
I think we should be excited about it. I think traditionally insurance used to work that people put their trust in an underwriter. And it sounds really simple, but it's true. I know in the market, in motor insurance, if you wanted to get capacity, you had to hire a guy that had the reputation that the capacity providers trusted. So that is naturally going to lend less to mobility because people's books of business are dependent on this person's reputation to be able to kind of go forward. I think now that we are looking at underwriting in very different ways, you are looking for different skill sets. And I think talent and people are your absolute biggest strength, particularly when you look at technology, because actually what you want is the people to drive the vision and to have the emotional intelligence, because the machines, hopefully, will do a lot of the donkey work for you.
I can continue, but we could answer some of these questions as they appear on the screen. Of course, from here, if any of you guys have any questions, any of you guys have any questions, please raise your hand and we can pass the mic to you. But we're going to do a mix of answering the questions on the screen as well as some of the questions that I might ask. So I think already one of them got answered. So what do you guys think are the key characteristics of a successful partnership between,
So a little bit
kind of answered some of it, but...
Yeah, so a little bit on what I said before. If you, from the insurance company point of view, again, separation from the mothership to be completely independent, but still in touch with the main guys, it worked the best for us. And we at the time try to adapt to this approach as well. For example, for the duration of the partnership, of the MVP engagement, we ultimately becoming an insurance company in question. So we created our own tools. We do this through the hackathon process. When we bring the right people, the right mix to the table, we can deliver wonderful results within a matter of weeks. We can go from the conceptual ideas to MVP product within the few weeks. Only because we've got some new tools to bring to the table, but also the insurance company operates a little bit separate from the mothership. I guess the mixture of both means we can deliver in quite timely manner.
Yeah, absolutely. I think one of the things that stands out for me, just based on hearing from the other panel members, is transparency. And I think where there have been previously bad examples or bad sort of realizations of the partnerships, it's because there hasn't been that transparency and openness in terms of the intent from all parties within the partnership. I think, you know, that is key. We're not looking to kind of, take someone else's business model or distribution or anything. I think if each party is confident in what they're bringing, whether it is the product, whether it is the capacity, whether it's the expertise, I think that allows for these partnerships to start off on a very honest footing and then grow.
So I kind of think that the continuation of that answer will be related to the question that is also appearing there. So in terms of the value they bring and so on, what is the value that Munich Re will bring in partnering? I think that's the third question that we are seeing there, directly asked you.
Yeah, sure thing. So within Munich Re Digital Partners, yes, of course, as a reinsurer, we provide the capacity, but we provide so much more than that. So product expertise, tech expertise, things such as regulatory status. Like a lot of the InsurTechs who come to work with us, they may not have a cemented status that the FCA recognizes, and we have the subject matter expertise to help with that. Things such as, why would a small InsurTech, why would they have a head of compliance? Someone in that sort of capacity to help the guys understand that, to launch an insurance product, these regulatory and compliance tasks have to be checked off. So, that sort of in-house expertise that we have gleaned from the mothership, we're processing and we're passing it on to our InsurTechs to mean that they can launch and not get caught out by what are the insurance industry norms.
Yep. I think we answered some of these, and I'm not sure if after we answer them they disappear or they still survive, but I'm going to go for one more question off the list. So Sam Evans, and so... Microphone, please. Yes, sorry for that. You see, this is difficult. What was I going to ask? So I was going to ask about, so Saadhvi talks about some of the work that Munich Re is doing in terms of partnering with InsurTech startups and so on, and you guys are also in the space of investing in such early stage companies. How do you see the difference between a corporate venture arm of an insurance company or reinsurance company and what you guys do in terms of what you're observing? What is better there? What is more difficult for you guys or easier for you guys?
Yeah, sure. And it's a really actually interesting dynamic at the moment. So a lot of the capital that's flowing into the industry is coming from the CVCs, so the internal investment arms of the insurers and reinsurers. We actually sit partially in the middle of this debate. So actually the way our fund is structured, our investors are insurance companies or reinsurance companies. So in a sense, we're helping them with their innovation strategy as well as acting as an investment strategy. So we get to see both sides of this debate. I need to be a little bit careful what I say here, but present company accepted, obviously. A lot of the CVCs don't have the financial discipline of a financial investor, and I think that's consciously or unconsciously driven by the fact that they've got huge balance sheets, obviously sitting behind them. This stat isn't specific to insurance, but across the piece, where there is a CVC involved in a deal, the valuation on average is 45% higher. And for us, that creates quite a challenging environment because InsurTech is in a bubble from a valuation perspective. We see business models that are barely advanced from a PowerPoint, expecting valuations of 20, 30, 40 million. Ultimately, this, that isn't sustainable. So that will correct, obviously, over time. But at the moment, that's certainly an issue from our perspective. I think the other dynamic, and this again depends on the nature of the CVC, but many startups, their business model suffers by having an insurer directly invest into their cap table. And we've actually seen startups being thrown out of the room by a CEO when he's realized that one of his competitors has an investment in that business. So independence is important. Obviously, the reinsurers have a slightly different perspective. Being one step removed, it's less of a problem. But I think as a startup, you need to carefully balance the strategic benefits that you get from working, obviously, with a big established player, traded off against the independence concerns that may create.
Yeah. There was a question that disappeared now. It was, is AI just a hype or something? I can assure you, no, it's not. But yeah, that's the one. For Sam White and Saadhvi, a more general question. What can the insurance industry do to attract more female talent to the InsurTech industry?
I think they can do a lot to attract more diversity, full stop. Unfortunately, from a demographics viewpoint, the insurance is very specifically limited. And that's for a variety of different reasons. I work with a couple of the large incumbents who are trying very, very hard to change things, but they struggle because they don't attract female talent at entry point. And that's to do with the perception of the market, the language that they use on job adverts, etc., tends to be... I spoke to James Reeder at Cavea, and he had a really interesting piece of tech that they were using that apparently could determine the gender of language that's used, and they applied it to their job adverts for insurance, and it was something like
the gender of a person who wrote the JD?
Yeah, but also whether the language itself feels male or female. Apparently there's a difference, and this came out as sort of 85% male, and they wondered why they only got a 16% female application rate. And they changed it and went back in, and the university graduate level almost doubled overnight. So there's lots of practical things that the industry can do to attract talent. I do think we need a bit of a rebrand, generally. I think the consumers generally don't think very highly of insurance, and I think that's down to the industry to change that perception in terms of what we do and how we do it. And I think women will naturally be more attracted to the industry once we've gone through that process. But
yeah, no, I'm absolutely with Sam on that. I think at sort of grassroots levels, just thinking back to like uni days and stuff like that, like when you had, a grad scheme kind of open days and things like that, like also the people who used to come in and be on those stalls for insurance companies, I just couldn't relate to them. And, as I'm sure most people in here, you fall into insurance, and I'm so glad I did because of the exposure that I have now. But if you told me that from that, I would have been attracted to coming into insurance, I think I'm very doubtful. But what I would say is that when we go back to how we're looking to recruit these people, you want somebody. Why is investment banking so amazing to graduates? Because it's like glamorized and oh my days, like I totally want to be in that industry. But when you look at like get more people who we can relate to as graduates, get more people at, you know, the experienced higher levels who you want to aspire to, bring them out as unfortunate kind of poster children of the industry, and I think you'll start attracting those, you know, female leaders, members of the insurance industry that we really need.
So basically, two specific things that came out of it was some tone and rewarding and so on the messages we send out to the community to attract talent. One was around to basically brand the industry as a place that there are more female icons and female kind of leadership and so on. And anything like that in addition to these two that you want to add?
I think that probably culturally some things need to change within the industry as well, to encourage women. I mean, I've never had to work in an incumbent, so I don't have the same perspective as some of my colleagues may have, because I've worked for myself since I was 24, so I won't have suffered the same kind of restrictions, but I do think that there are some cultural shifts that need to change, and I hear a lot of stuff about that there just isn't the talent, and a lot of that is that people haven't had the opportunity yet to showcase their abilities, and I think, you know, some of the changes around that would be really beneficial.
There is also a question about, we see a lot of InsurTech in the consumer space. Anything happening in the SME insurance? Sorry, I forgot the mic again. So loads of InsurTech startups in the consumer space. Anything happening in the SME, mid-market, commercial?
You're happy to take first stab. So yeah, I mean, actually, interestingly, we see greater potential within commercial lines than we do within personal lines. Certainly at the moment, and we're pushing hard into this space. We've just made an investment actually in a business focused on changing the commercial marine sector. So it's an analytics platform. So going after actually the one of the oldest and most traditional lines of business in the world, and that's predicated on using a whole array of new data that's available from IoT devices that are covering the vessels, which create fantastic insights into risk profiles of vessels, where they're located, where they're traveling, the risks associated with the different ports and the like. So that's actually been very exciting, and that's also linking in with the Maersk blockchain initiative, Insure. So we're seeing that overlap that I mentioned between blockchain, AI, and IoT. SME as well is getting a lot of focus. Interestingly, I think businesses that have maybe struggled or realized that some of the personal applications they're developing can be equally well applied to SME type businesses. SMEs are typically underserved. There's a lot of underinsurance because the traditional distribution models are too expensive. They don't translate well to premiums that are obviously smaller. Our second investment from our fund actually was in a business that is looking to innovate within SME and sourcing again new data sources to automate underwriting, to pre-populate policy applications to make the conversion process a lot easier, and really drive different insights into the insurance needs of the SME, which are typically not well understood by the entrepreneurs. So actually we see it as a very exciting space.
There's actually a question that said, why did we ask women about the women issues? Because the question was addressed directly to Sam and Saadhvi. But, I mean, of course, Sam and Dawid, you're more than welcome to add.
We're sponsoring a women's-only, women-led tech company that's linked to ITC in Vegas. So, we're very much supportive of comments that were made earlier.
There was another question directly asked to, I think, Sam. I think the question disappeared, but there was a question addressed to Sam about
digital
motor
transformation.
Insurance. Yeah,
Yes.
I think that's a good question, because I think, let me add a little bit more to it as well. Like, motor is a space that we're seeing a lot of transformations, at least theoretically, in terms of the autonomous vehicles and the smart cities. And like, it's fundamentally a changing landscape. It's one of those areas where the core risk and the core technology driving the story will be fundamentally different, that a lot of the things that insurers take pride in, the historical claim, the knowledge of customers and so on, could suddenly get hugely challenged. Because autonomous vehicles, car companies, cities and so on, governments and so on might have a lot more data and insight than insurers. How do you think about, I mean, of course, that question plus a little bit of the things that I said. How do you think about that?
I think it's kind of wildly exciting. I mean, particularly from my perspective, I started the business with the very simple premise that the majority of challenges in the motor market actually come from the claims process. So, you know, I look at it very simply. You only have the level of premium that you have, and if you're going to make a profit, you need to be paying out less in claims than you're collecting in premium. Now, the supply chain that sits behind that from a motor perspective is often where the problems occur. So being able to use technology to identify issues within the supply chain, identify ways to make the process more efficient and generally improve the consumer journey, I think is often overlooked when people are looking at this market sector.
I think
We've got time for one more question, and then we're going to wrap this session up. So,
there is a chance that some of you guys might not have the app on your mobile phone. Do you want to ask a question if you pass the mic, or no? Okay. We could probably pick one of the questions here. Were you continue your answer and you stopped because of this? Or
No,
you...
that was no.
Okay.
That's pretty much it.
What? Yeah.
I have a question, and it relates to that partnership that you start. For clarification and transparency, would you approach it like a project management with the scope of work so that it's clear on both sides?
I think you should. I absolutely think
Let
you
me
should.
just repeat the question so everybody hears it. So it was more around the startup, big companies, partnerships. How should it be approached so we reinforce this whole transparency thing? Should it be approached like a project management or some other way? Sorry for...
No, I've done a couple of projects with insurers, and we absolutely have done it that way. And it's interesting because we tend to assume that certain things, and we tend to assume that people see things from the same perspective that we do. And the wonderful thing about a project management plan is that when that assumption gets written down, everybody gets to see it, and then it gets to be challenged. So, yeah, I think that's a fantastic point.
okay, so can I just say thank you very much for a brilliant panel session. Thank you.